As the market digests a more restrictive Fed policy and the labor imbalance, we're going to dig a little deeper into the impact these things will have this month. Already, September is a historically weak month for the markets overall. Midterm years can be particularly challenging, though. Our next guest has her eye on the technicals, though, and says that there is a pretty good chance of a rainbow after this potential September storm. Let's bring in Jessica Inskip, Options Play Director of Product and Education, for more on everything we've been talking about here, Jessica. And let's say you see a rainbow coming. Explain why and when. How much more rain might we have to endure before that?
Yeah, absolutely. And September, like you said, is such a challenging month. And if we're taking it a look from a seasonality perspective, just like you said, it's very challenging, and layered into a midterm year, it's even more so challenging. But if we take a step back for seasonality and look forward into October, when we have those downward months in September, October is up 65% of the time, up about 2.14%, which should really overcome the weakness and the storm that we expect in September. And Powell has a lot of data that's going to come out that will hopefully help alleviate that as we get more communication and clarity into what the market wants to do and how it reacts.
You know, Jessica, things have felt pretty good the last few weeks and maybe the last 6 to 8 weeks overall. Maybe not good all the time, but a lot better than we had been doing for this year to this point. What technicals are you watching that tell you that things could get better here? What key levels?
Yeah, so I really care about the cloud model. I think that's extremely important. We looked at key levels as far as when Powell spoke, and also when he last spoke, and we actually retracted right back to that level. So it's a little different from your technical basis, is just looking from a starting point to an ending point, qualitative, quantitative, if you will. But from a support level, it's 38 to 3,900. I actually love the way Carter Worth describes support. It's like a mattress. So it's soft and it sinks in. So that's the level we're watching right now. Going below that, and I've been calling it for a while, is that 200 weekly moving average. Historically, taking a big picture on the overall market in every major bear market, it always surpasses that line. And that line right now is around 3,600.
What do you do with some of these big macro stories, especially the global geopolitical concerns? I mean, those are the headlines we've heard over the last 6 or 7 hours that I think have people scratching their heads. How do you kind of play that into what you're doing from not a fundamental perspective, but from a technical perspective? How do you kind of play with that?
Yeah, you've got to balance macro versus micro. So in the heart of technical analysis, it's the study of patterns and events, and it believes the market's forward-looking and then prices in any information as soon as it's digested. And then there's that digestive period. And then we look for those levels of support and resistance to see those stopping points and when to play. So if you have something like the Russian news come out today, or any CPI data or something like that, we know that's going to move the market. It's almost like when earnings comes out, we anticipate something, and then we utilize those support and resistance levels to see when it's going to stop. And if it tests those levels, is it going to sink further, or is it perhaps going to bounce back?
I get it. But you know what? We're going to keep our eye on that rainbow and maybe cross our fingers for this. Jessica, thank you.
Thank you, Becky.